Here's the thing, guys. Unfinished business in trading refers to situation where some market activity was expected but only partially completed, leaving a portion of that activity to be resolved at a later time. Now let me quickly show you these two examples. If you focus on this day, what happened? The prices came down to this point and the prices got rejected exactly at the 30 minutes low from 26th Jan 245 candle. Prices went up, and then on the second day itself prices came down to this zone. Let me show you one more example. So focus on this price action. So what happened? Somewhere around this area there was a sharp rejection upside, a v-shaped recovery we can say, and 3 days later what happened? The prices came down, revisited this zone. Now you might wonder, is this random or is it predictable? So let me tell you with confidence, guys, this is not random at all. In fact, it's very much predictable if you understand a few market profile concepts. So here is what we are going to do in this video. We'll take both of these two examples and apply the unfinished business from market profile, and I'll show you how these could have been predicted in advance using market profile concepts. This is going to change the way you look at the market. Just before we continue, guys, don't forget to check out our other trading videos on the homepage, and if you find this video helpful, hit that subscribe button and turn on the notifications. So coming back, this concept of unfinished business varies across price action, order flow and market profile. So as I said previously, in this video I am specifically going to focus on unfinished business in market profile. I'm not going to touch order flow, or I'm not going to touch price action, but I'm going to explain it to you by taking both price action chart and market profile chart. So market profile introduces several concepts that explain how price should behave and how the profile should form based on the price movement. So however, sometimes what happens, market participants take deliberate action to deviate from the normal structure or the expected structure. So once their objective is achieved, guys, they step out of the markets, and only then does price completes the previously deviated path as I have shown you. Now let's understand what's considered normal. It follows one of the basic ideas in market profile, where when there is excess at the top or bottom, it means the price auction process is finished in that direction. So let me explain again what excess means. So this excess is when price goes too high or too low and then quickly gets pushed back, like the market is saying no, this is too much for the day. This is how it looks like on price action chart. If you look at in the 915 candle, prices went up, it got rejected. There are more than 2 A's here, which speaks about its excess. We call it as selling tail. And even on the low in the J time period, if you look at, there are minimum 2 J's here, we call it as excess. So this speaks about there is no follow up selling in the K time period or the next candle itself. Buyers are strong, prices has been pushed upside by these buyers. On the next day also prices went up. So this kind of pattern tells us that both the buyers and sellers have tested the extremes in the sense high and low, and the market is done exploring those prices for now. Now take another example, one that is not so normal. So let me mark it. So what happened here again, in A time period we have more than 2 A's. There is a clear selling tail here. So the auction process upside is done, or we call it as end of auction upside. So the prices will try to probe downside to find more number of buyers. If the buyers come in, you will see another excess downside and prices again gets rejected up. So if you focus here, these I and J are exactly same, and it doesn't have any kind of excess either in J or I time period. Excess means there are no two TPOs that are projecting outside. This is what it is in price action. So this two candles 30 minutes low are exactly same, so we don't have any excess here. This lack of excess at the low means the auction process is not complete in down direction. So the market is still exploring lower prices and hasn't found a strong stopping point yet. So because of this, the downtrend might continue after a brief pause or consolidation. Now this is where our main topic, unfinished business, comes in. Because there is no excess at this point, we call it as unfinished business zone, meaning the market may come back to this level in the future to complete the auction process. Let me show you one more interesting thing. The second example I have shown you in the starting. So in this example, what happened, prices have entered into this value area, this gray area, but then immediately prices have got rejected upside. For 3 days prices went up, so a slight pullback was there, and then what happened, prices again came down to this area. Now why do you think this has happened? This is where I want to introduce another type of unfinished business which ties into classic market profile concept called the 80% rule. So according to this rule, if a price enters a previous value area and stays accepted there for at least 2 time periods, then there is a 80% probability that it will cover the entire value area. So in this case, what happened, the prices got clearly accepted inside this 26 June 25 value area. It's a clear acceptance, so it was supposed to cover up to this point as per 80% rule, but that has not happened on this day. It could be because of various reasons. There could be holidays, it could be expiry, or there could be event. So many things will be there that left behind a unfinished business. So this area we call it as unfinished business, or in simple terms, a pending area that the market hadn't explored yet. And that's why, guys, the price came back 3 days later to revisit and complete the uncovered value area, fulfilling the 80% rule on the second attempt. If you find this video helpful, guys, don't forget to subscribe and share it with your trading friends. Until the next video, thank you and happy trading.